basically. Manav Chopra and Brijesh Bhatia, both of them joining us right now on the show to run us through their trades and what they do on the index as well as specific stocks. I'll start off with you, Brijesh. What do you do on the index today? I mean, the last 3 or 4 days have been marred with volatility in the kinds of cuts we've seen as well as the peaks that the index has scaled. Today seems to be an up day, but would you take a trade?
Yeah, definitely I would go for a long trade. So if you look at the setup, this is the after a long time market has breached previous day high convincingly and trading nearly for 2-3 hours above the previous day high. And if you look at the volatility has been very much higher. If you look at the US VIX as well as India VIX, both are trading at nearly 20-21%, which is slightly higher. So I think one should clearly keep a long bet. And if we have look at the 10,500 call writing in last couple of days, and which was happening aggressively. And today, after a strong up move, we have seen first time that 10,500 calls writing unwinding has been happening in the calls section. So I think clear cut, it's definitely a buy, and I think 10,600 levels could be seen in 1 to 2 days of trading session on Nifty. So at currently around 10,480, 485 levels on futures, it's a good bet to go along with the stop loss of 410 for the target of around 10,600 levels on the upside.
Manav Chopra with us as well. Manav, good afternoon. Thanks for joining in. How are you approaching trade today?
See, the markets have already seen a good series of declines, and most of the indices are bouncing from its oversold levels. I think if we look on a very short-term perspective, the risk-reward ratio for long position is not very attractive. But the best thing is that in case if any pullback comes into the market, I think the best thing is to buy on dips. We've seen an extreme volatility near the lows, and usually such formation leads to a short-term bottom in place. It's too early to call for that, but eventually, yes, a retracement rally is due on cards, which is likely to happen over the period of time. The important support for Nifty would be at 10,350 on the lower side. So any long positions with a stop loss of 10,320 is recommended. And I think this pullback rally would see few legs on the upside, and eventually I think 10,700, 800 would be the mark on the upside. And another interesting factor is that, the Bank Nifty recently, in this panic decline, we saw the Nifty make a new low versus Bank Nifty formed a higher bottom. So, that outperformance internally was indicating some strength, and eventually we have seen Bank Nifty also break crucial resistance today. I think on the weekly setup, Bank Nifty looks very well poised, and a mean reversion rally towards the levels of 26,000 is what we are looking at.
Okay, we'll come to your stock-specific strategies as well. I think Karnataka Bank reporting its Q2 numbers. Those numbers are flashing down on your screen. Net NPA numbers have gone up marginally at 3% versus 2.92% on a quarter-on-quarter basis. Stock has actually shot up and then come back right down. It's at 99 odd rupees right now, so just a 1% move on Karnataka Bank. Profits have gone up a bit, so closer to about 116 odd crores in terms of the net profit number. Let's take your stock ideas then. We'll start off with you, Brijesh. You've got a buy call on an ITC and Voltas.
Yeah, definitely. If you look at the ITC, it has been FMCG has been a strong contender, and we have seen strong accumulations happening in the stock at around 270. So if you look at the volume, where stock has dipped from around 300 to around 270, the volumes were slightly on a lower side. But at the same time, if you look at the volumes, where stock has recovered from around 268, 270 to 276 today. The volume has been very much on the higher side, which clearly indicates the accumulation has been happening in this stock. And if you look at the market volatility, stocks has been beaten down, but ITC has been slightly outperforming in the FMCG space as well. So I think ITC would be a good bet to go long at around 276, and I think a target of around 293 in the short term in a 1 week's time cannot be ruled out. And if one can want to look for a 3 to 6 months point of view, I think 350, 370 is a target for maybe a quarter's time on ITC. I think could be a good bet. For short term, one should place a stop loss at around 269.5 with the where the momentum has started from around 270 today. So I'm just betting below the low of today's momentum.
Okay,
Another stock is Voltas.
Sure, go ahead, Brijesh. Brijesh, go ahead.
Yeah. Another stock is Voltas. If you look at the Voltas, it's been clearly taking support at a key psychological level of around 500, and we have seen positive divergence on RSI. So which clearly indicates that the bearish momentum has ended for this stock, and with the volume gaining momentum above 500 at around 515 could be a good bet to go long for the target of around 555, just placing the gap resistance which is around 562. So I'm expecting 555, 560 levels on the upside on Voltas, and stop loss could be placed at around just below 500, which is 495 levels, and one can look for keep a time frame of around 1 to 2 weeks on this stock.
Manav, your ideas for the day?
Yes, my first buy call is on HDFC Bank. Most importantly, the stock has declined from its peak of 2200 levels, and it has tested its important weekly rising trend line. And the weekly charts usually don't come on the oversold levels for HDFC Bank. I think this has happened after good 1.5 years, which is providing a very good margin of safety. And on the daily charts, HDFC Bank has formed a double bottom pattern. I think a lot of confluence is coming into the picture for HDFC for high margin of safety and a good trade setup. So this is a buy with a stop of 1940 on the lower side for an upside target of 2070. My second buy would be on TVS Motors. We have seen a complete underperformance happen and a very sharp decline happen to the stock, and the prices have taken support near its crucial long-term trend line, and there has been good bullish candlesticks formation, which indicates there is limited downside and a possible short covering rally which could eventually play out into this. So based on that, a contrarian play would be taken into this. Keep a stop loss of 520 on the lower side and for an upside target of 585.
Okay. Stay on, gentlemen. So much more to talk about. Let's get in one more market opinion on the fundamental side. Viraj Mehta of Equirius Securities joins us right now with his thoughts on the markets and specific pockets. Viraj, good having you. Thanks so much for joining in. Just first off the bat, are you putting in fresh money to work right now, or as a house in your portfolio schemes, are you sitting on a bit of cash?
So thanks a lot for having me on your show.
Pleasure.
So as a general strategy as a whole, whatever money we had got since November last year till almost June of this year, most of those portfolios had anywhere between 30 to 45% cash. As of today, as we speak, over last 1.5 to 2 months, we have deployed almost 15 to 20% of fresh capital. We think that valuations of most of the companies that were unaffordable last year had become extremely affordable, and some of them were as low as market was saying that they would start degrowing from this year onwards for next 5 years. So that's why we put a lot of capital to work. We still have some cash, but if the markets remain here and we are able to complete our work on some of the companies that we are already working on, I think we'll be left with very little cash over next 1 or 2 months if the markets stay here.
Right. Which are the pockets that you're favoring as a house right now?
So we are firm believers of A, value, and B, mean reversion of capital. So some of the sectors where we think that market doesn't see immediate growth, and market we think in a lot of companies market overvalues growth over a short term and undervalues slower growth in a couple of quarters for some of the companies. So we have put in money to work in some of the agrochemical companies. We have bought some capital good companies. We think if you look at the order book of some of the capital good companies, for the first time in last 5 years, their order book to revenue is hitting all-time highs after probably a span of 5 to 6 years. So we're putting money to work there. We own one gold financing NBFC where again market is valuing it at almost valuing it, saying that it's going to grow. It's not going to grow at all. So we are putting money to work there. So there are specific pockets that we like. We've never been big fans of private sector banks or or that's not a space that we are comfortable. We were comfortable even last year or this year. So that's not what we own.
So let's talk about some of the specific pockets, the agrochemical space and in detail. Now, you like, I believe, Excel Crop Care as well as Bharat Rasayan. Why do you like these names?
Yeah. So if you look at globally, from 2014 to 2017 calendar years, agrochemical players globally degrew by almost 10 to 11%. The inventories a couple of years back were touching all-time highs. If you look at the current inventory positions globally have normalized, or in some of the continents they are one standard deviation below the normalized inventory. In that situation, and in a situation where technical manufacturing is going away from China, you have Indian technical players with superior track record, not only gaining market share by distributing technicals within Indian formulation entities, but also exporting. Both of these companies, for example, let's say take Excel Crop Care. It's a company which was taken over by Sumitomo Chemicals 2.5 years back, and since then there is continuous revenue growth of 15%. Sorry. Plus there is margin improvement which is happening in the company. With the new separate entity of Sumitomo also being merged within Excel Crop Care, we believe the opportunity for Excel multifolds dramatically, because now you will have also patented molecules which will be launched in India through this entity. They currently are the second biggest player in India in agrochemical. If you put both the companies, the merged entity and the listed entity together today, and they are the fastest growing. So today you're getting that company with almost 2200 crore trailing revenue at less than 6,000, around 6,000 crore market cap, which is a steep discount to some of the larger peers, and with a lot of growth expected due to newer molecules being launched in this company. So we think if somebody wants to play India agrochem for next 3, 4, 5 years, this has the possibility of both revenue growth and earnings growth, but also being re-rated as a large MNC player over a period of time. So we really like that space. And as a supplier to them, Bharat Rasayan has one of the best managements who has been able to scale up the business in molecules where they are market leaders in India. So if you look at the balance sheet management and the growth that they have achieved, where some of the larger players have stagnated, it's really fascinating. And now they're putting up the new plant, which is the largest capex of their life. So they're seeing extremely good revenue traction going forward. So that's why as a space and as a supplier, we are kind of positive on both of these.
All right, so two stocks there that Viraj likes. One is Bharat Rasayan and one is Excel Crop Care. Both the stocks doing extremely well in today's session. The other pocket which is extremely active is the entire power space. They're surging in trade today. Well, a high-powered committee has recommended some relief for Gujarat-based power plants, according to a Bank of America Merrill Lynch report. Yatin Mohta, he's standing by to give us more details on what's causing this flurry of activity within the power space. Yatin.
Devina, most of us are aware that the Mundra power plant for both Tata Power and Adani Power has been reeling under, losses. This is primarily due to the pass-through not available because, all of these plants have been based on imported coal fuel. And, over a period because of policy changes, the coal prices have shot up. And these companies are not able to pass on these higher coal costs to the consumer because of the power purchase agreements already entered with the state discoms. Now there was a high power committee which was being formed by the Gujarat government in order to provide some bit of relief to the power producers. And now what news reports are suggesting that the high power committee has recommended certain measures because of which there could be a situation wherein the plants could operate at a no profit, no loss kind of arrangement. Of course, for this, there are various conditions being laid out. One of them being that the previous losses need to be borne by the power producers, and henceforth, after a sunset date, the state government will have to step in. So this is a broad arrangement in which there could be significant amount of financial relief coming in for all of these power plants, because all of these power plants being loss making have a significant impact on the debt and the balance sheet position of both Adani Power and Tata Power. So once if there is an arrangement of no profit no loss, then probably the plants can operate without the discoms being impacted and the power companies being impacted. So there is a formula being worked out. All of the stakeholders will be taken into confidence. But also what Bloomberg reported earlier on this day, that the Supreme Court will hear the matter in the next 2 weeks, because they had asked for the committee report. So all of these factors have led to the kind of rally that we are looking at for both Adani Power and Tata Power. And of course, in the private space, SR Power is also likely to get benefit, given the fact that the committee has recommended it for power plants which are there in the state of Gujarat operating on imported coal.
Okay, Yatin, thanks a lot for that. So all of these stocks fairly active in today's session. In fact, pull up the last 7 days performance of Adani Power, and this move in the stock actually started, I think, 4 days ago, the day that the stock actually shot up about 30-odd%. Last 7 days performance, the stock's been up closer to 26-odd%. On the charts, Manav, any of these power stocks look appealing?
See, at the current levels, I think going purely by the momentum, I think we can still see some more upside in Adani Power. It has important support around the levels of 31.50, 31, and in case if there is any dip on the intraday basis, I think one can definitely get in, keep a stop loss below 31, and eventually I see the stock breaking its previous highs of 36 and eventually going towards 38. So for a momentum play, this definitely still holds. The other stock that I like is PTC. In fact, the stock on the weekly perspective is also formed a double bottom pattern and a good strong reversal formation. There is still much more upside into this stock, and it has formed some strong support clusters, and there is a breakout with volume. So I think all in all, the power space is definitely looking good. PTC has important support around 20.72, and on the upside we can see the stock rally towards the levels of 80.
Okay, that's on the power space. Anything that you have in specific stocks? I'm going to just pull up a few that have been making moves in today's session. And Aban Offshore is up about 7-odd% in trade right now. Sadbhav Engineering at 235 has moved up 17% today. That stock is active. Future Consumer is up 10% at 40 right now. And the others, including a Century Textile and an Aditya Birla Fashion, both of them gaining by about 8.5%. Coming to you, Brijesh, any of these stocks that you find fancy towards? Sadbhav Engineering, Future Consumer, Century Textiles?
I think I will go for Future Consumer. So if you look at the momentum in last 3-4 months, stock was slightly dipping from around 50-55 levels to now around 35 levels. But most importantly, if we look at the recent momentum at around 35, and when stock has broken its previous swing low of around 39 levels, this clearly indicates that the drop, the breakdown and the reversal is very quick. So generally, this happens when there is a stock is in the last leg of bearish momentum. So if we look at the technical term, it is known as generally shakeout, where the weak hands are being taken out. And if you look at the volume in last couple of days, the bearish momentum volumes has clearly dried out. And with the good positive momentum of 10% today and volumes at a nearly 1 week high, I think this is definitely a good buy. Those stop loss will be slightly deeper at around 35-36 levels. So I would recommend around 38-39 if stocks dip. One should definitely look for a long opportunity. And I think if want to hold for a month times 51-53 levels could be seen. And for 6 months down the line, I think stocks can even test 72-76 levels on the upside. So Future Consumer would be the best bet. I think one should look at.
Well, some of these names are doing well. What's trying to do well are some of the NBFCs. Today we've had a clutch of them moving up in trade. The Edelweisses of the world have all gained 7-8% for the last few days. Actually, they've been doing well. But Viraj, I believe, likes the gold financing names. He briefly referred to a Manappuram Finance. Viraj, why a Manappuram Finance compared to some of its other peers and compared to a whole host of other NBFCs that are available?
So, as investors, our philosophy is pretty risk averse. So when we look at financials, we tend to look at companies where we have asset support. So either we will look at companies which are housing finance companies, or we will look at gold financing companies, because those are pretty secured lending, where your asset is pretty safe and it's liquid. It can be liquidated. When I look at an HFC, it's a very tightly fought market, with more and more capital flowing into the sector and more people wanting to do HFCs. Whereas if you look at the gold financing companies, a lot of guys have actually tried doing gold financing and over a period of time lost their capital and rushed out of gold financing, because it needs a certain AUM, it needs a certain practices which others have, and including some of the banks, have not been able to do very well. Two of the guys who do it very well is Muthoot and Manappuram. We actually like both of them. It's just that Manappuram, we have slightly more comfortable. We are slightly more comfortable with Manappuram at this stage because of two reasons. One, I think on the base of where it is, I think Manappuram can grow slightly faster than Muthoot. The valuation of Manappuram are slightly lower than Muthoot, and as a growth trajectory over next 3 to 4 years, I think they'll be far better, or they could be far better managed than Muthoot. But overall put together, we like gold financing space as a whole. Today the market actually values them that 5 years out both of them are going to shut. Essentially both of them are trading at around book value or 1.2 times book value with more than 20% ROE and have grown in the past. So we see no reason why they cannot keep growing at the same pace over next 3 to 4 years. And at some point market will correct the way it looks at these NBFCs. So last 1.5 years, markets were only looking at companies which were asset growers. So be it Edelweiss of the world or a whole host of other companies which were growing their assets pretty quickly, but the control over the assets and quality of assets were slightly questionable. I think once sanity prevails in the market, people will look at slightly more safer assets to look at, and we think that this is where they belong. This category belongs there, and that's why we are very comfortable owning them as a business.
Okay, that's a take on Manappuram Finance and why Equirus as a house likes this stock. Another stock that I'd like to pull up is an international paper. We've been getting consistent queries on this one. The stock moved from a high of 591 just a few days back to lows of 277, from where it's now bounced back up and is trading closer to about 465. Brijesh, what would you do with international paper?
I think the stock has retraced at around 50% of its move and showing some good strength. The only concern for me is the level of around 497 to 510. If that level is not taken out, I think stock might see again a downtick or maybe a consolidate around those levels. And most importantly, if you look at the last couple of days rally, where stock has seen 420, 430 levels to 416, I think the lack of volume is missing for me, and I don't think this 500 would be the sustainable level. In case stocks convincingly move off 500 level, then definitely it move into the new range and might see a new highs as well. But I would slightly wait for 500 to consolidate.
Okay, that's an international paper, some queries that were coming in. Let's talk about an Eicher Motors. That stock now up 6.5%. Sharp move in the last few days. The stock has moved from 22,000. In fact, today itself, a 1,400 rupee nudge up for the counter. Manav, would you take a trade on an Eicher Motor? Manav, can you hear me? I don't think Manav can hear me. Brijesh, why don't you take this one? Eicher Motors.
Definitely look for a long in auto space. If you look at the auto space like Maruti, Eichers, all are showing some good strength after consolidating for last 3-4 sessions in a range. Though there was a strong volatility happening, markets indices hitting news low. But if you look at the Eicher in a sharp sell-off hit around low of around 20,000 on 4th of October, and though that low was clearly held in last 3-4 trading sessions, and we have seen good volumes picking up in this stock. I think definitely a buy, and I think 26,000 cannot be ruled out again on Eicher Motors. So definitely around 23,000 deep could be a good accumulation level with the stop loss of around 21,800 on the stock, and a target of around 26,000, 26,800 can be expected on the upside.
Okay, Manav, are you back with us? Can you hear us? I don't think Manav can hear us as well. Okay, Viraj, before we let you go, any of the cap goods space is the other pocket that you guys like. Would you want to share the rationale out there and what within that large bucket of stocks that you like the most?
So yeah, we like cap goods, and to paint every company in cap goods as the same will not be correct. It's like painting all companies in NBFC space with the same color. I think within capital goods, some of the select companies are seeing order book traction both from public spending as well as private spending. Some of the companies, let's say if you look at pump companies, if you look at companies like KSB, Kirloskar Brother, Worthington Pumps, all of them are seeing very good traction in their order book, comparing it to their current revenues. This is one of the best times that they have seen in last 2-3 years. The operating leverage, the operating leverage that some of these guys will see over next 2 years or 8 quarters of execution, almost 35 to 40% of that incremental revenue will flow down to their PBT. So there is huge operating leverage sitting in their balance sheet and P&L today, which will work for us over next 2 years. So we are very positive on pumps as a space, but not somebody who is dealing with solar pumps or irrigation pumps. We're looking at slightly more industrial capex driven pumps rather than off the shelf pumps.
Okay, Viraj, we'll leave it at that. Thanks so much for taking the time out and joining us today and sharing your thoughts with us. What's not done well today is Aurobindo. We're down about 2.5. TCS, of course, continues to grind lower, 1926 now, and that's comfortably now below the 100-day moving average. The question mark only is if it stays below that level, then the support levels drag down even lower. HCL Tech and Mindtree too have corrected a little bit after TCS numbers. What's chalk and cheese though is the alcohol or the liquor space. United Breweries is down about 1.5%. GM Breweries, which came out with numbers, let's pull that one up and see what that is doing. That's up about 5% in trade, so not bad going there. And the Soam Distilleries is up about 9% too, and United Spirits, if I'm not wrong, let's bring that stock up on your screen. That stock too is about 4.5% higher. So selectively, some of these stocks in this pocket are doing well. Anyways, but let's slip into a break. As we slip into the break, hear out a slice of a conversation that we had with the top team of Citi, who were talking to us on their expectations of what the Q2 numbers or Q2 earnings season could throw up.
See, in terms of the second quarter, it should be kind of steady and similar to the first quarter. First quarter, we ended up for our coverage universe around 12% earnings growth. Okay, so this quarter we are expecting around 14. Okay, now if you see some of the sectors which has been pretty volatile over the last few quarters, which is energy, financials to some extent, and materials. If you exclude those, then earnings is kind of expected to be flattish. Okay, but these sectors are a tailwind, and which is why we are expecting around 14-15% earnings growth. The good thing is that except healthcare and communications, telecom, you are actually seeing top line growth being decent across the board. Almost all the sectors, our expectations are for a 11% plus top line growth, which is pretty healthy. But having said that, earnings of 12%, 14%, I think one should keep in mind that consensus is still building in pretty aggressive 20% plus, in fact 23, 24, 25, depending on who you look at, kind of earnings estimates for this year. So those numbers still look a little on the higher side.
So I just want to add, when you started the first quarter, and I'm talking about when July started, have you all drawn down your estimates? Because what we've done is we track a lot of consensus estimates on Bloomberg, and gradually when this quarter starts in terms of the first date to the day when the first Nifty company comes out with numbers, there is a big drawdown as far as the estimate is concerned. Is that something that you all have done this time around?
Yeah, so see, that's a very valid question because it's been happening for 4 years now.
Okay.
Practically every quarter the numbers come down, but interestingly this quarter the numbers have not changed much because there are two things offsetting each other. There is some pressure on a few sectors, so those are bringing numbers down, but the currency sensitives, because of the rupee depreciation, are actually seeing upgrades. Like IT services, for example, we have seen upgraded maybe at least twice in this quarter for most of the companies. So those are kind of offsetting each other, which is why that trend is not really visible this quarter.
Last quarter, all would have been hunky-dory had it not been for SBI. What is the black swan that we are looking at this time around?
This time around, in terms of black swan, I really don't expect anything large. Corporate banks would probably report muted earnings because the difference this quarter versus last is we've not seen any large asset resolutions. So last quarter we had seen a few NPA recoveries happening from a couple of large asset resolutions, which has not happened because IBC cases have been dragged on court. So the recovery side things might be muted, but at the same time on a quarter-on-quarter basis, margin should be flat to up. Because the MCLR rate hikes which banks have been taking, some of that will start flowing through the P&L numbers. So net-net, I really don't expect any black swan kind of an event. Whether a particular bank reports a P&L loss, for example, SBI specifically last quarter had a very large provision on investments because bond yields had moved by 50 basis points. This quarter, 10-year GSEC has moved about 12 basis points. So the order of magnitude is obviously going to be much lower, right? So hopefully no black swans from financials.
What about NBFC space? Is there something that you're expecting here?
So NBFCs, obviously last 2 weeks, it's been a different world, so to say, but most of that pressure started in the last week of September, if you look at the broader NBFC. So it's unlikely to be fully manifested in the 2Q numbers, be it AUM growth or be it margins, right? Liquidity conditions have improved in October vis-a-vis last week of September, but we are far from normal, right? Pricing is still on the higher side. Maybe not every NBFC is able to borrow at the right rate. So while 2Q numbers will be decent, I think there is really a lot of focus on management commentary going into 3Q in terms of how the funding lines are shaping up, are banks lending, not lending, how mutual funds are saying things. Because what happens in 2Q and 3Q can be drastically different based on the liquidity situation which is prevailing right now.
So obviously when this NBFC rout happened, a lot of clients must have called you. So what's your basic understanding? Is the worst over for the big sell-off that we've seen? Because counters have fallen anywhere between 30 to 50%, some of them even more. A prime company like people thought Bajaj Finance could do nothing wrong, that's down almost 30%, right. And others the pain is even more. Your view on this NBFC route, is the worst over?
So the way we are seeing it is we are not yet believing that it will be an availability of funds issue. It would probably be a cost of funds issue. Okay. So funding costs will go up, but for the better quality names, funding will be available at a price. The challenge is if it actually were to become an availability of funds issue, then we'll have solvency matters, right, where people are not able to service the debt. We believe we are not there yet, but if the current conditions prevail through the quarter, then potentially we get there. But stock reaction, as you rightly said, have been a bit severe. So we believe that in this scenario, it is better to go with the better quality names who have, let's say, strong parentage or have a strong demonstrated track record. We have a neutral view on Bajaj on account of valuations, but Bajaj is probably that company, or HDFC Limited, for example, should be able to do better in this environment, which goes back to the long demonstrated track record.
Well, thanks for staying back with us on Countdown. 27 minutes left for the markets to shut shop, and we're trading fairly well for ourselves. Led higher predominantly by what's happening to the rate sensitives, so the iShares and the Bajaj Finances and the Maruti Suzukis of the world. We're doing reasonably well for ourselves. The world markets, as we stated at the start of the show, are also a happy place because the European markets are trading with about 0.5% kind of a green. Dow futures were trading with about 1% when we started off the show at about 2 p.m. I reckon that they would still be in the green off the highs, but Dow is very volatile as we've seen yesterday. For now, they seem like they are going to be in the green in the session today. Before we just get in the chart of the day, if Manav Chopra can hear me. Manav, we've spoken at length about the Nifty trades. What about the Nifty Bank at 643 points higher? Would you initiate a fresh long, or would you carry home a long if you initiated it about maybe 100 points below?
See, I would definitely not initiate a fresh longs, but already who has initiated should carry forward. The simple reason is the risk reward at the current levels does not really provide that, because the immediate support for Bank Nifty is around about 25,100, which is 300 points lower. So any short-term dip in next sometime can be looked for any fresh long play. Most importantly, Neeraj, when we look at this chart formation, in fact, there is a series of positive divergence that was developed in Bank Nifty. And, with the momentum indicators and also with Bank Nifty, where Bank Nifty started to form a higher bottom versus the Nifty. So, that the whole setup was saying loudly, the possibility of a good and sharp pullback. I sense the kind of weekly close that we're seeing today and which will eventually happen above 25,350 levels would open the gates on the upside, and will not be surprised to see some more legs on the upside towards the levels of 26,000. So keeping that in mind, one should remain long in the banking space, and if given a chance, 25,100 would be a stop loss for your long positions.
Okay, that's interesting. But the Nifty Bank rock solid right now. There's almost nothing that seems to be deterring it, and we're likely to shut shop about 2.5% higher at least, if not more. So the Indian benchmark indices might be the worst performers in Asia, and that occurrence has opened over the last 1 month or so. So what does it mean for valuations, I think, across the sphere? Nikki Mirchandani is here to tell us about it in our Chart of the Day segment. Nikki.
Hi Neeraj, clearly Indian market have not been one of the best performing indices, or maybe the market that we've seen in the last 1 month. In fact, the returns have been at a negative 8% as compared to 3 to 6% that we've seen for other emerging market basket. But then if you look at the valuation, that's a different picture altogether. India still demands quite a hefty valuations. Let me just put it that way. If you look at the current PE that India currently demands, it's at 22 times, obviously the most expensive one in the emerging market countries, and that is at a premium to at least more than 10% to your 10-year average. This compares to a discount of 13 to 45% offered by other emerging market peers. So clearly valuations seem to be on upside. What brokerages make out of this development? Well, not a positive development for the market either. They suggest that there could be more pain and downside left for Indian market indices, and they've also said that the political uncertainties relating to your weaker rupee, rising interest rate scenario definitely doesn't augur well for the market. Doesn't seem that they've been completely absorbed by the market.
Well, Nikki, thanks for putting that into perspective. That's India versus rest of the world. But for now, India versus rest of the world, I think India seems to be winning if today's session is taken into account. Just bring up this week's performance as well before we get in our next expert on board. We should bring up what the Indian markets have done for this entire week. So the last 5 days of this 7 days chart, look at this. It's essentially the up move today, which is negating that little bit of underperformance that would have been the case if we would have been flat today. The Nifty Bank, though, has had a decent enough outing this whole week, 4% higher. Good going, really, for most of the banking names. Anand Tandon joins us right now with his thoughts. Anand, just when everybody was talking about this looking like going down even further and the global markets now starting to crack, the crude pullback has given us some breathing space. Is this a pullback that can extend itself, or would you still remain wary?
Well, we have to look at what are the pointers that can give us an idea of where the market can go. So I think the real danger points remain What happens to oil? Of course, a small pullback is all right, but will it sustain at a lower level or will it start moving up? And more importantly, now I think the two things that you have to look for. One is what Mr. Trump does vis-a-vis India with regard to sanctions, if there are any. And two, what happens to the US market, because clearly that is now showing significant signs of panic. And if that were to, of course, yesterday it closed with the Dow a bit higher, the futures higher, but if the market were to actually resume a downturn, which I think it will, then that will obviously put a strain on all emerging markets, including India. For the moment, I think the most over-owned sectors, which was the NBFCs, have actually kind of done a stock split. Most of them are down by half. So to some extent, I think you are finding some value buying going on there. Though I doubt it is value, it is simply the fact that we have an anchoring effect of what the price was. And therefore, one tends to feel that, it's fallen half, so it should go up from here. I would personally be somewhat wary of those assumptions, because what the market is telling you is that the high growth assumptions are not necessarily valid anymore.
Okay. So, Anand, when would you be comfortable putting more money to work? Would it be when things around the markets cool off and die down and stop being in news, for example, crude and the likes, or would it be at particular valuation levels on the indices?
Well, I think for the index, it's a little difficult to argue that it has got any value in it. But at individual stock levels, you'll always find something which moves.
Sorry, let me rephrase my question. My question is, even for those individual bottom-up stories that you would buy, I'm presuming that you would buy it if the main board indices stabilize a bit. Not really talking about buying into any of the large cap or the Nifty itself, but even for your individual investments, you would probably want the markets to stabilize a bit. Now, would it be stability due to factors outside which impact the markets, or would it be a question of levels that the markets reach at which bake in some of the factors which cause the volatility?
So I personally think that, so yes, you can, the markets can continue to go up and down, and the clear increase in volatility that we are seeing, it tells you that the direction is not clear for most participants. I think you should still focus on the particular stock. So if you find something that has fallen off enough for you to think there is value, you should buy it. So for example, I was just looking at the two exchanges. So we have the MCX and the BSE. There were a lot of investors who are willing to look at BSE at a far higher price than now. And currently the market caps of the two are such that actually MCX is bigger than BSE in terms of the market cap, despite the kind of cash and assets that BSE has. So if you remove the cash, I think the valuation of BSE would be probably cash and investments would be now maybe about 500-600 crores, which given the fact that it has made 250 crores seems to make it almost a throwaway price. I'm not making a case for BSE. I'm just saying that, because of the fact that you would expect to see volumes come down going forward if the market were to be in a bad shape, here is a sector which is obviously taking the brunt of it. So for someone who's willing to go past the current downturn and look at it on a longer time point of view, there will be a price at which you will be prepared to buy it, despite the fact that the current numbers don't justify, or the current valuation don't justify, or the market does not justify necessarily being very bullish. So essentially what I'm saying is it depends on the, in your personal mode of looking at investments. And for me as a value investor, I think value is far more important than necessarily the direction of the market.
Interesting. Are you looking to put some gunpowder to work within the NBFC space, Anand?
So that is one sector that I still don't like. I think, though they, like I said, typically the assumptions are that that is the one growth area that will be there. And I'm arguing that we have seen a seminal shift in the way that the market will perceive this sector in terms of risk, which will mean two things. One, that the 40% growth that some of the leading companies were registering is unlikely to get registered because of the simple fact they won't be able to raise money. And two, the fact that the cost of capital is going up both domestically and globally will mean that you have to rework some of the valuation parameters on both counts. And I'm saying you don't have to assume any worst case situation. If a company stops growing at 40 and starts growing at 20, and it's trading at, let's say, 6 times book value, it should actually trade at 2.5 times book value, everything else being the same. So, when it halves, it will still be fully priced. So, the argument that something that has fallen off a cliff is good enough reason for it to go up would be true only if you assume that it was status quo and nothing has changed in terms of the rest of the environment. In my view, it has. Others could have a different view.
Yeah, of course, and everybody's entitled to their own, which is what makes this market such a wonderful place. Maybe a couple of chart checks going because these stocks are doing well. And then I will talk about a couple of losers as well. But Brijesh, to you first. Edelweiss is up 10%. This bounce back, which is lasting now 2 or 3 days, into an Edel, into maybe a couple of others. Would you trade them?
Yeah, definitely I would go for Edelweiss long, because if you look at the stock has clearly taken support at around 145 level, which was around 38.2 to 44.6% retracements if you look at the rally from on the monthly charts. And if I look at the daily chart, clearly visible bullish harmonic patterns. And if you look at the momentum, has been very quick in the NBFC space. I think Edelweiss and the Bajaj Finance, these two stocks is the bet I would go for in this space. DHFL and other stocks I would slightly avoid. Edelweiss, I think 215, 220 cannot be ruled out in coming weeks. And Bajaj Finance also, we think this is the best bet. And if you look at the previous swings low of around 1750, 1800 levels, Bajaj Finance has held quite well, and we have seen strong comeback from around 1912 low to around 2300 levels again. So I think Bajaj Finance, we think 3000 levels cannot be ruled out again in the coming months. And with the swing low of around 1900 could be the best stop loss one should keep and go long on Bajaj Finance.
Manav, just a quick view on TCS. That stock is down about 3% today. Either that or HCL Tech or maybe the Nifty IT. Manav, the question is for you. I think we're consistently...
The IT space has observed a series of decline, and on a very short-term perspective, I think IT space would witness this going forward. TCS has specifically breached its 100 EMA, and on the upside, 1950 to 1980 would be the resistance. So I sense TCS can see some more decline towards the levels of 1850 on the immediate basis, and I think that would be the level that one can look to re-enter. HCL Technologies also has observed a series of decline from its recent peak and now testing its long-term averages. So it is nearing its important support of 960. So I think that is the level where some sort of a pause could be witnessed for the immediate decline. So any reversal near this range, I think 950 could be the stop loss to initiate long position and just play for a short-term pullback rally towards the levels of 120 on the upside.
Okay, Jaman, stay on. Time to get a sense of what dealing rooms are recommending in the session today. Yatin Mota and Darshan Mehta are here with their channel checks. Good afternoon, both of you. Darshan, let's start with you first.
Yeah, so one of the stocks that's under focus today is Mindtree. It's been very, very volatile. A couple of reasons why dealers indicate that there is selling. First of all, the way the rupee has now moved, it started to appreciate. Most of the IT companies are down in trade. TCS is down 3%. And this is one of the only mid-cap IT company which hasn't corrected like the peers, like a KPIT or NIT Tech. Even on the chart looks extremely weak. So Mindtree is something that dealers are closely watching out for. Again, HUL will come out with numbers today. The anticipation is of a strong number this time around. So that's something that they're watching out. Despite a higher base, they believe that HUL can deliver a strong set of numbers. And the final stock that's been spoken about is at the NBFC space. Even though most of the NBFCs are up in trade, the general trend is that at least wait for it to stabilize, don't get into the counter in a hurry. So NBFCs as a pack is a clear avoid at this point of time.
Well, Neeraj, Adani Power, and of course we spoke about it in detail, but on the dealing room front also in the past few days, we have seen a strong amount of buying and open interest addition as far as Adani Power is concerned on the long side, and dealers do expect the uptrend to continue based on F&O trend. So, FI buying coupled with the trends that are emerging in the future and option segment, dealers are recommending a buy here. Apart from that, Reliance Industries, dealers are recommending a BTSC strategy here, 3.5% already up for the big boy, but dealers expect further more upside as far as this counter is concerned. And do watch out for Karnataka Bank. They have come out with their quarter 2 earnings. Of course, the exposure that the market earlier was anticipating in the IL&FS group, management has looked at clarifying on that. Of course, the analyst conference call is there in the evening. but dealers do indicate that post the results, buy on dips is the kind of strategy that they are advising to the HNI clients.
Okay, we'll watch out for these. Thanks a lot for that, Yatin, as well as Darshan. So those are some key names to watch out for. Speaking of stocks which have done well recently, SpiceJet has received its first Boeing 737 MAX aircraft today. The budget carrier, which has placed orders for 205 new planes, hopes to make the most of better mileage as aviation fuel continues to hurt margins. Bhanu Arora caught up with Ajay Singh and started off by asking him about his future growth plans.
This is the first of 205 aircraft that SpiceJet expects to add to its fleet. This is an incredibly nice aircraft. You can walk around it and you'll see the difference between this and the old aircraft. Firstly, this aircraft consumes far less fuel. We expect that there will be a fuel saving of 16 to 18% using this aircraft. It's also a less noisy aircraft, and so passengers will have to will get 40% less noise on this aircraft. The seats have been rearranged to ensure a much superior Spice Max product, where there is additional legroom, there is an adjustable headrest, there are cushions and a whole host of other features. So we expect that this aircraft will be a very useful one for passengers, because also this can fly longer distances. The range is larger, 19 to 20% more than the old aircraft, and that will enable us to go to several new destinations that we currently cannot fly to. One of the features that we are most excited about is the fact that for the first time in India, we will be providing broadband internet on board this aircraft. So this aircraft is equipped with all the equipment which can make that happen. We are awaiting some government clearances, and as soon as those can come in, we expect to give broadband internet to all our passengers.
When is the next fleet of this aircraft coming through? What is the timeline for that?
We expect to get another 10 aircraft in this year itself, before the end of December. As I said, the total order is for 205 aircraft, and they'll be coming quite quickly. And the order will be complete in the next 4 or 5 years.
In the next?
4 to 5 years.
Okay. Government has reduced excise duty on ATF. How will it impact SpiceJet? How are you seeing the operating margins ahead?
Well, at this time, as you know, the cost has gone up tremendously in the last 1 year. Because of the rise in oil price as well as the depreciation of the Indian rupee. This 3% reduction is a welcome step, of course, but we hope that the state governments will also match it and reduce VAT by 3%. So at this time, I think the priority for all airlines is to ensure that they raise their fares and increase their yields to pass on some of the additional cost that they are incurring. In addition to that, governments, both central and state governments, need to work to help us reduce cost and bring us on par in taxation terms with our peers around the world.
With this government's measure, are we expecting that airlines will increase the fares, considering that the festival season is in?
I certainly hope so. I think airlines need to pass on the additional cost in terms of fares. The fares are extremely reasonable at this time. I don't think it will impact the consumers to pay 10-12% more than they are currently paying, and I hope that this festive season will be an opportunity for airlines to raise fares.
So would that impact passenger traveling?
I don't think so. We believe that the inherent demand is so strong. The market has been growing at 20% year on year. We believe that a marginal increase in fares will have very little impact on demand.
Well, that's SpiceJet, and just bring up the aviation counters once before we get in closing strategies from our experts. Remember, because of this excise duty cut and otherwise, there has been a bit of a bounce into these names. Jet is breathing a sigh of relief, $200. Interglobe Aviation above 800, and SpiceJet too, which had fallen to substantial lows, is now at about 72 or 73. So some bit of relief for these names. Keep in mind, crude having come off too is leading to some sentiment change into these names. However, let's get in closing strategies from our experts first. Manav, what would be your top closing strategy?
Yes, my first buy call would be on Bharat Forge. The stock is an extreme oversold levels, and it has seen a good base formation around the 560 zone, a good breakout on the intraday and the daily charts. I think this would be a good BTSC with a stop of 565 on the lower side. Expect an upside target of 586, and my second call would be a buy on JSW Steel. The stock has witnessed a good series of decline and a breakout from the trend line, and the prices are closing above its yesterday's high, so which is a good positive signal. A stop of 374 on the lower side for an upside target of 395.
Okay, Brijesh, what about you? Your top closing strategy?
I would go for PNB as a BTST. If you look at the PNB, it was quite resisting in the range of around 65.5, 66 range for quite some time, and today it breached a minor resistance of 66.5, 67 zone, and just nearly closing about the 65 resistance level. I think BTST would be on PNB around 66.50 for the target of around 68.50, 69.50, and one can place a stop loss of just below 65, which was the previous support zone. Another stock I would go for is the Ambuja Cement. If you look at the cement sector, it has been gaining a strong up move, and Ambuja being the stronger performance and holding 205, 200 zone supports and resisting around 216, 70 levels. That zone we have seen clearly taken out, and the markets been closing about those zones. I think at 219, one can expect target of around 227 to 229 levels on the upside, with the stop loss of around 215 for BTST trade.
Interesting. Manav, just one quick follow-up question. You looking at the long-term charts of autos the last time that we spoke, there's a bit of a bounce in the auto index after carnage the last few days. What are you viewing here?
See, most importantly, very good stocks have again tested its important support levels. When we talk about M&M, the stock has seen a good decline from its 975 zone, and it's retested its previous monthly breakout point. So a very good margin of safety in some select stocks. Let me name M&M or TVS Motors, Escorts, and Maruti. I think auto as a whole pack is it on the immediate basis, it will see a very good upside bounce of another 10 to 15% on a very short-term perspective. But the thing to look out is whether it's going to form a good higher base formation. I think for that we'll have to wait for some time. But for a very short-term up move, I think M&M and TVS Motors would be the best pick.
Okay, Anand. Is there merit in looking at some of these large cap auto names which have corrected quite a bit? I mean, auto story is not really over, and while the headwinds don't look as strong as the ones that might be there for, say, the NBFC space.
Well, the NBFCs will impact the autos eventually because, if you have higher cost financing and the fact that the cost is going up because of the various import tariffs that the government keeps imposing on the consumers, will make it more expensive. That said, from the near-term point of view, yes, if the market continues to bounce, clearly these are areas where, the assumption then has to be that consumption is still going to remain strong. And therefore, the auto sector, which has fallen off quite severely, will be the place that you want to be in. But on a slightly longer-term basis, I think, unless you have a clear understanding of how the costs will behave, it's not likely that it will go back to its earlier peak.
Interesting. But would you bifurcate between two-wheelers and four-wheelers, or LCVs, HCVs, or rather the commercial vehicles, Anand?
Certainly, each of them are sub-segments and have their own dynamics. So within that, I would argue that, I think if it is going to be somewhat more business as usual, even then, something like an Ashok Leyland is probably better positioned. Mahindra, with the launch of the new SUV, which seems to be doing quite okay, we have to still see how that really pans out over a longer period. Is probably better insulated. Maruti, because of various other competition issues and so on, may continue to drag also because of the fact of what's happening with the currency. In the two-wheeler space, I think, if you go past the stage that Bajaj is pushing volumes and realize that actually they are one of the biggest beneficiaries of the currency, I would argue that they are probably best positioned, at least in terms of being able to stave off any domestic competition. So overall, I think among the two-wheelers, Bajaj looks to me quite attractive.
Okay. Manav and Brijesh, gentlemen, take a moment, of course, to thank you for joining in today and giving us your views. Really, really appreciate your time. and have a great weekend. Just waiting for HUL numbers to come out any moment from now.